We begin today with the busy week ahead. It's the start of a pivotal week for markets as investors await a likely 50 basis point rate hike from the Federal Reserve. Other key economic data investors will be eyeing: CPI on Tuesday and retail sales on Thursday. But guys, of course, all eyes are on the Federal Reserve and whether Fed Chief Jerome Powell walks back some of this financial easing we have seen in markets over the past month or so. Yeah, and with the CPI print that we're expecting, we're also going to be looking towards the producer price index. Well, not towards it. That came out last week, but that one of the precursors rather going into that to really get a sense of where even in that moderation, you're starting to see this also flow through to the consumer side of the equation too, and how the Fed digests that data, plus gives an outlook perhaps even going into 2023, where as of right now, we're looking at a 50 basis point hike coming out of this meeting. But what does the next meeting signal as well from their commentary once we get that? Yes, and then looking into next year, will we even get a cut in interest rates? People are really trying to game this out. For the CPI, we're looking at a 0.3% gain month over month in that number, 6.1% year over year. And I'm going to be paying a lot of attention to the components of CPI this week. Housing and rent could be a wild card. We had seen it come down the prior month. Will we see that, that continue? Apparel, we've all been talking about what's been going on with apparel prices. They could likely drop those prices. Gasoline could drop. So all these interesting components are going to be at play here. I've also been watching, Bloomberg does this survey of investors, what they call their MLive Pulse survey. Really interesting, a split in between professional investors and retail investors as to how to position ahead of the Fed meeting, because it looks like that retail investors, 37% of them think that owning U.S. stocks is the best trade against ahead of the Fed. 40% of professional investors say it's better to short equities. So we have had, on balance, an average gain on Fed days when there's we are listening to the press conference, but you never know what's going to happen. Yeah, another key risk here, I would say, Dennis Butcher, we're always citing his work, 22V Research, noting we could see a big pickup in financial market tightening in coming weeks. He points to that stronger payroll data we got a couple weeks ago, services PMI coming in strong, and that PPI last week, which really put the market under pressure, came in hotter than expected. Investors didn't like that.